So you can surmise or assume that the volume here was buying. It's pushing the market back up. So when the market starts to calm back down and push down, now the key is going to be, is the market following through? Okay, remember this ties in with the whole sequence of events. So we have the market pushing down on high volume. We have the market moving up now on high volume. So the key is going to be, does the market follow through to the downside? And you can see here that volume drops off very dramatically and there's no follow through. So somewhere in this region here, and we're getting close to the end of the sweet spot too, somewhere in this area here, you got about another hour where the market was really poised to move back up. Okay, so the 15-minute bar is useful to monitor those types of things. What I meant to say was that I don't constantly like to watch it, because one of my personal weaknesses as a trader is if I'm looking at a short time frame, I will get laser focused on that time frame and I'll start doing all sorts of crazy stuff. So I've got to avoid that and move up to a higher time frame. Now, you may not have that trouble, but it's one of the things, wow, I guess the coffee's really kicking in. One of the things that you've got to keep track of is how are you reacting. That's why journaling is so important. Keeping track of your ups and downs, if you will, as a trader. In fact, there's going to be a lot of that kind of stuff at the live event that's going to be available to you. Some of the personal tools that I've developed. In fact, some of the feedback that I've gotten from the crew members has been very vital in me refining what I do, making it easier to follow, more of a step-by-step. I mean, there's a lot of stuff that you can look forward to at the live event. Anyway, so again, 15-minute I used to do some. Well, actually, I just thought of something. It's not that I'm monitoring. It's monitoring the market. It's that I want to go back and check. Okay, so what I like to do, the ideal for me is to wait for each one of these hourly bars to close. Okay, what I'm looking for, remember, is the ideal setup. If I don't get the ideal setup, hey, I just pass it by. And one of the things that happens in an ideal setup is that the market pushes down on high volume, you get a certain pattern, and then you see the market starting to move up. So after this bar closes, and after this bar closes, I can go to my 15-minute chart. Let me make sure I've got everything lined up here. Whoops. I can come to my 15-minute chart and I can see that this area here, where does it flip over? Right there? Yeah. Okay, so the 4 bars here, that's this hour. Okay, this down hour right there. So as soon as this bar closes, I can then go back to the 15-minute bar and start checking and seeing what is the market doing and looking at where the volume is coming in. Let me blow this back up. So I can see, okay, as the market was moving down, that's fine. What does the volume look like? And let's look at it like this. What does the volume look like? Well, the volume's been going down, hasn't it? So the volume spiked up into this area here. It stayed high. Okay, so all these comparisons can happen on the 15-minute bar. But then as it's now moving down, breaking through these lows, is volume increasing? No. So what does that mean? It means that the likelihood of the market continuing to move down is low. But I also know that if professional money is buying while all this is happening, if professional money is buying over here and they're buying over here, and maybe they're fishing to see, they're taking out some stops right there, so they clean these people up is what it's called. They clean up the stops. If there's no more selling going on, then the market's going to have to go up. But what is that going to look like? Well,